Now let's talk about a scalping strategy. You know, smart money concept is one of the best trading strategy that can allow you to get high probability trading setups with good risk to reward ratio. Now, before you can be able to use smart money concepts correctly and make money from these financial markets, some of the things you should be able to do is you should be able to understand past price action, that is the previous price action. If you look from your left, you should be able to understand what price printed on the price chart previously. And secondly, another thing you should understand is you should be able to understand what is currently happening on the price chart, that is what is happening presently in the markets. Okay, so if you're able to understand the previous price action, the price action that is currently occurring in the market, you can be able to predict future price movements. As simple as that. So let me use this chart to convey what I'm trying to say, to explain further, so you will be able to understand exactly what I'm trying to explain. So from this point, what we can clearly see is that price formed a high right here, and before that we have this low. So what you should note is that this was our trading range. Okay, and after that what we see is we had a pullback. After the pullback, price formed a high right here, which broke this structure from the left. Okay, I hope you can clearly see that, which broke structure at this particular area. So this is our current low and our current high. So at this point we are trading in this range, we are in this trading range. And what is our expectation? Our expectation is that we're going to have this pullback. After this pullback, we're going to have a continuation to the upside. Now what we don't want to see is price coming lower to take this current low, because this is more like a protected low, and you know the job of a low when we are in a bullish trend is to take a high. So this particular low we have right here did its job by taking this particular high we have right here. So what you should note is that we are in a bullish trend and we don't want to see price coming back to this area. So what price did is, after it's pulled back into this range, we have the continuation to the upside. And when we got this continuation to the upside, what you're going to notice is that this is our current low and this is our current high. Now at this point, what you can see is that this is equally our trading range, and this low right here did its job. And what is the job of this low? The job of this low is to take this particular high. So since the low did its job by taking this high, what you should note is that this is a protected low right here. We have a protected low at this particular area, and now that we're getting a pullback into this range, our expectation is that price is not going to take this particular low. Instead, what we want to see price do is a little pullback in order to take this weak high, because the highs we have at these areas are weak, while the lows we have are strong lows, while the lows are doing their job. Okay, now at this point you see price takes the high, and what else can we actually see? You see when price pulled back and it takes this particular high, what you're going to note is that this is your current low and this is your current high. Just like I explained, the job of a low is to take a high, and from what you can see, this low right here, it did this job by taking this particular high and pointing another higher high. So where is our trading range? Our trading range is this low we have right here and this particular high. So what is our expectation? Our expectation is that price is going to pull back and we're going to get a continuation to the upside. Right now at this point, what we see is price moved lower and it took this protected low, this strong low we have right here. Price broke the protected lows. This is why we see this market structure shift, that is price changing in its character. This is a change of character, price showing us bearish intentions, that is we are likely going to shift from this bullish trend to a bearish trend. Now this is where we have a market structure shift, and this is a very basic smart money concept, but a lot of people still struggle with it. A lot of people who don't understand how to trade with this concept, they struggle with it. When you get this market structure shift, so let's assume you understood exactly what was happening in the past. Let's say that this area is just the past. Okay, now let's assume that when we got this market structure shift, this is the present price action we have right here. So now that you understand that this is the present price action, price has switched structure. So what you can actually do is you can actually mark out a point of interest which you could look to trade from. That is probably marking your supply zone right here. But if you look closely, what we can actually see is that price pushed to the downside after the shift in structure. It actually respected this demand zone we have right here, because from what you can see, when we got this shift in market structure, price continues to push to the downside, and what you can actually see is that price mitigates this demand zone Now we have a push to the upside before it mitigates this supply zone we have right here. Since we have switched in structure, we've switched trend, so this is the area we'll be looking to trade from right now. Price mitigates this zone and we see a push to the downside. So now price push to the downside. What you should note is that this high did this job by printing this particular low we have right here, and this low was able to take this particular low. So what you should note is that this particular area is protected, and what you see after the pullback that couldn't take this and it mitigates this particular point of interest, what we see is that this particular high we have right here pushed price to take this low we have right here. So this is our new trading range, right? This is our new trading range, and this area right here is protected, and we don't want to see price coming to take this area. So what you can actually do is you can actually wait for price to come back to your point of interest, then we look to trade in continuation to the downside because we've switched trend from that particular area. Okay, so this is a basic smart money concept, and it doesn't matter whether you're a beginner or advanced trader. It doesn't matter being a beginner or being an advanced trader. If you understand this concept, you will make money from the financial markets. No need to complicate things, okay? Why a lot of people fail in the financial market is that they complicate things too much that they get it wrong, okay? So this is basic, having a shift in structure and looking for your supply zone and taking advantage of that. Okay, so that is it. So let's see a live example. Now let's understand exactly what is happening on the price chart. So let's start from this area right now. So what you can see is that price forms a low and it prints this high. So this is a push to the upside. Now what you should note is that this is our trading range, okay? The high and this low is our trading range, and this pullback we have on right now, we don't expect this pullback to take this low. Why? This is our protected low, and we don't want to see price taking that particular low. So we are in a bullish trend, and after that what we see is that this pullback prints this low. After it prints this low, we see a push to the upside. Was it able to print a high right here? So let's mark it out and see if it was able to print a high. So from that particular area, so let me shift this so I don't get it wrong. So from this week to the body of the candle, okay, so that's how we mark our zone. So from what you can actually see, this is not a high being formed here, but this is what we call a liquidity sweep. Price taking the external range liquidity, that is the buy side liquidity we have over here. Price takes it, and we have this retracement to the downside which wicks at this low. Okay, it didn't close at this lows. Instead, we have these wicks that equally swept the liquidity at this particular lows. Then we have a continuation to the upside. So let's see if price was able to close at this area to see if a new high has been printed. Now extending the line, what you see is that price was not able to close above this high, but instead this is where we got the close above the high. That is the body of the candle closing above this particular high. So what you should note is that this is your low right here, and this is your current high at this particular area. This low is protected. You don't want to see price coming back to this particular low. So after the high was formed, we have a pullback that formed this new high. After this new high was formed, now we have another pullback. So this was the pullback that prints this high, breaking another structure to the upside. So I think it would be nice to mark this particular break of structure because this price action here is a little bit clearer. Now if I try to zoom into this area, so we see the price action we have right here clearly, so we don't make mistake while mapping out our zones. So what you can clearly see at this particular area is that this is our current high, right? This is the range we are in. Price has been caught in this range. So what is our expectation? Our expectation is that price can actually pull back like the pullback we've seen right here, but it shouldn't take this low. Okay, we don't want to see price take this protected low, because this protected low did this job by taking this particular high we have right here. It took this particular high, so we don't expect price to take this particular low. Now our expectation is that price can pull back. We have an inefficiency at this area. Price is not efficient. We have a lot of imbalances, and we equally have a nice demand zone at this point. So our expectation is that price is going to come, mitigate this zone, and we're going to have a continuation to the upside. We don't want to see price close below this low. Okay, so this is our trading range. So when you understand price action like this, you see you're going to be making informed trading decisions. Just like we see, we are able to understand what was happening in the past. that is the previous price action. We understood it, and this is what is happening currently. So since you understood what is happening here, that is the current price action, you can be able to make informed trading decisions. So let's press price forward and see what we have right here. Now what you see is that price pulls back and it prints another high. Okay, now we have a new break of structure to the upside. Now what you should note is that this is your current low, and this low formed this high. Now this low did this job by taking this particular high. So what you should note is that this is a protected low, and we don't want to see price taking this particular low, and this is our range. So we want to see a pullback and a continuation to the upside. We don't want to see price closing below this particular low. Okay, so this is the way you should read price action and understand exactly what is happening on the price chart. So if you're able to mark, this is your high and this area right here is your current low. Now this pullback, we don't want to see it take this particular low, because if price takes this low, this is what we call a change of character, or we call it a market structure shift, which explains that we're going to have a possible shift in structure. Now let's press price forward and see how it goes. Now what you can actually see over here is that price takes this our protected low. Not only did it take the low, we equally see it mitigates this demand zone. We have a market structure shift at this particular area. So now we have a market structure shift. Our expectation is that we're going to have a good zone which we could look to trade from at this area, that is going to push price to the downside, because this demand zone has been mitigated. And secondly, we have a market structure shift. Now the way it should be done, if you want to mark your supply zone which you're going to look to trade from, this is a very good area right here. But personally, the way I mark my zones, because sometimes when price returns, it might actually get to this area to mitigate the wicks. Sometimes it doesn't happen always, but some of the times we usually see price action like that. So that's why you see me including some of the wicks. So personally, the way I'm going to mark my zone, this is the way it should be done, but I've shown you the correct way marking a zone should look like. You should take this particular candle right here, that is the bullish candle before this momentum kicks in. That should be your order block if you want to trade with an order block. So what I'm basically doing is, based on my own personal experience, this is what I see in the market, price coming to mitigate the wicks. So that is why you see me looking to trade from that particular area. Now what you should do right now is you could actually go down to your lower time frame for confirmation entry, but for this example we're going to use the aggressive entry type, which we can actually call the risk entry. We're going to place our stop loss above this zone or above this wick, so we don't get stopped out, and our stop loss at this area. Then you can look to place your targets, maybe 1:4 or 1:5, depending on your risk to reward ratio. Now another thing that is increasing the probability of this setup playing out, if I actually zoom out, what you're going to see is that price takes this external range liquidity. Okay, you see price took buy side liquidity. If I try to mark from that high to this area, so this is price taking buy side liquidity. So this is price, it took this buy side liquidity. So this is another confluence that is giving us the confidence to take this particular trade, because this is more like an ABC pattern where we have a liquidity sweep, price taking buy side liquidity, and now we're getting a shift inside this range. So this is a good zone to trade from, taking a trade from that zone that is targeting some of these lows we have right here. Okay, but personally, the way I trade, I usually go for 1:4, so that's why I enter this trade right here, looking to target this particular area. So let's press for price forward and see how this actually plays out. And you see price moves aggressively and it moves away from that particular area, and now we see price moving to the downside, and it went along to take this particular low right here. Now you see these lows that were protected initially, they are no longer protected right now, because you see we've switched structure right here. So these protected lows, they could equally be called a weak low right now. So you see price hits our targets immediately and massively after it mitigates our zone, and if anyone took a trade from here, the person has made profits, right? Now price has switched in structure. What you can actually do is you can actually take trading decisions and make your profit. So, and if you want to take another trade, this area right here could be another place you could look to enter your trade. This zone right here at first we have this order block, that is this bullish candle we have over here is your order block, but based on zone refinement, I'm refining it down to this bearish candle we have right here. Okay, so let's press price forward and see what you can redo, and let's actually read the price action we have over here. Now you see price continues to push to the downside, and now we have a retracement. So from what I can actually see here, what you can see is that price starts pulling back into this range. Remember, we have a pullback right here that broke structure to the downside, so this is a valid pullback right here. Now we're having this retracement, and from what I can see from this retracement, this is more like a build of liquidity. I hope you can clearly see that. You see price was building liquidity at this particular area. If I try to mark it, this looks more like a trend line liquidity area at this point. So this gives me confidence to mark out another point of interest at this particular area, which I can actually look to trade from, because you see price is building liquidity very close to this point of interest. So this is more like a liquidity to target. Okay, more like a liquidity to target. And if you look closely, what you can see is we have a liquidity to take before price is gonna tap into our point of interest. That is, if I try to mark this correctly, you can actually mark it this way. So this is a liquidity price is going to take before it mitigates our zone, and secondly, this is another one to target. So since I have 2 points of interest, what I can actually do, the way I do it personally, is that I can enter half of my position at this particular area, stop loss above the high, and if this one fails, I look to enter the remaining position at the zone at this particular high right here. So entering that position, I will still go for my 1:4. That is the way I trade. I usually go for 1:4 risk to reward trade. Your own risk to reward should equally be based on your personal preference and based on your risk management and, let's say, your trading plan. So playing this forward now, let's see what we have. Now you see what happened here. Like what I explained, price comes back, taps into this zone massively, and it paid us with a single candle. Okay, you see how price moved massively to the downside. So if you took this trade, you would have been paid in less than 30 minutes and you are out of this particular market. Okay, so this is it, and this is how you can be able to trade with smart money concepts, understanding what is happening in the past, because you see in the past price was bullish trending to the upside. So at the present area, we see a shift in structure, and we were able to predict what is going to happen in future, that is price pushing to the downside. Now if we continue to play price forward, you can see price continues to push to the downside, and you see that massive move to the downside. So if you actually took this trade, what you're going to notice is that you made a lot of money. That is, if you took the trade and you were able to hold to this particular low, this is about 1:12 risk to reward. So this is a very massive one, and this is how you can actually make money by understanding and trading with smart money concepts. I hope this was a very good one and you understand what I explained in today's video. So thanks very much, and if you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade.